The current event that we're going to talk about today is mortgage rates, and they're high right now. What's up, everybody? Welcome to the Cash Flow Digest. My name is Matt Faircloth, and I am one of the founders of the DeRosa Group, which is a company dedicated to transforming lives through real estate. We also have this awesome program called the Cash Flow Digest, which is a podcast, which is also a YouTube show, which is also a live broadcast here on our Facebook page, which is DeRosa Insiders, guys. So take a minute and go to DeRosa Insiders on Facebook and join our live community. You guys can come in. You guys can ask us questions. You guys can post comments. You guys can network with other people in the DeRosa Insiders community that are all fellow real estate investors. You guys can watch this program live, ask questions of myself, of our guests, and we go live every Friday at noon Eastern. Got some comments on the housing market, continued changes on the housing market, and a great article I want to share with you guys. The guest coming in, Joshua Ferrari, great guy. I think I'm going to talk to you guys about the current event that we're going to talk about today is mortgage rates, and they're high right now. The average rate to buy a home right now, if you were to go and borrow money today, August of 2023, would be in the say high sixes, low sevens, depending on your credit score. It's almost triple what it was upwards of 2 years ago. What's interesting about that is when people buy a home, and this is the same thing, guys, when people buy a car, when people buy a house, whatever it is, they really ought to price out what they're going to pay for that home or their house or that car that they're going to do. And this is the American way to do it anyway. They base it on what monthly payment they're going to have to pay. So like, okay, I need a new car and I need to keep the monthly payment below $500. I know because I've been there when I bought cars myself or when I bought houses. When you first get going, a lot of people base their buying power on monthly payments because they get paid when? Monthly. So they're trying to correlate that monthly payment to how it fits into their monthly budget, their monthly income, their monthly everything. At the end of the day, houses typically get bought on monthly payment. That's just a fact. Let's just say if you're looking to buy a $500,000 house, the first thing you're going to do is to look at how much you can lay down and how much the monthly payment is going to be for that asset. So be that a car, be that a home, whatever it is. The biggest thing that drives monthly payments, the interest rate. So if interest rates have tripled, that means that monthly payments have gone up just that much too. So the problem is that America has put a lot of buying on hold. We've seen a lot of buying for single family homes for private residence. This has fallen off the map, right? But a lot of America, and check out this interesting article on Housing Wire. This is an interesting article that says that's a big factor, right? If a lot of things happen, if housing interest rates fall down below 5%, which they will, the housing market is going to absolutely blow out. A lot of people have said what they would be willing to do if they would consider selling. And that's interesting because a lot of folks that I respect have talked about interest rates perhaps staying where they are for a little bit. If they start to creep back down below 5%, which they're a good bit away from 5%, most people in the housing market, upwards of 80%, have said that they would be open to selling if interest rates drop below 5. Well, how long is that going to take, right? So that might mean, guys, that we might be looking at a rate of stagnancy in the market for a while on the housing side. As we all know, housing sales tends to spur things in the economy. How often do you hear people that sell their house, get a check, and then go buy another house, but also take some of that check and go buy some furniture for the new house, maybe go buy themselves a new car, maybe go make some other investments. The sale of real estate, home ownership, is typically where a lot of America holds their wealth in their retirement accounts and in their homes. And so if they're going to be holding off on selling their homes or refinancing their home as well, that will cause a slowdown in injections in many other vehicles and other places in the economy. Once rates start to come back down, you're going to see a major influx of dollars coming in, not just to the housing market, but into all things. Then people start perhaps refinancing their house, doing some home improvements. That provides jobs to contractors, that buys some building materials, that perhaps causes them to buy more furniture, maybe go on a bigger vacation. But housing, if it lies stagnant, as it will for a little while, as this article is saying, and doesn't do anything, and people just kind of stay put and keep their monthly payments the way they are and not buy new houses, then you're going to see a bit of a slowdown in people's buying ability and their willingness to get out there and spend their discretionary income, because their home has been that big piggy bank for many, many years. And if that tends to sit for a while, we might see more and more of a slowdown. But once the Fed starts dropping rates, that's when people will open their pocketbooks back up and jump back in. But we might be holding our breath for a little bit until that happens. I want to introduce you guys to a friend of mine. He's got the coolest last name ever. It insisted there's no relation, although I'm not sure about that, to the Ferrari family. Welcome, man. How are you today?
Good, man. It's good to hear some of the stuff you were talking about just a second ago.
What are your thoughts there? There was an article we found on Housing Wire that a lot of Americans, like 80% of America, says that they would consider selling their house if interest rates fell below 5%. My opinion is that rates are probably going to stay on that residential housing side well above 5 for their foreseeable future. So to me, that means that most of America, unless they have to, are not going to be selling their house anytime soon. What do you think about that?
Yeah, I'm probably thinking the same thing. I mean, my parents are actually living with us right now. Moved down here.
Lucky you.
To Tampa, and they're in the process of building their home. But you know, with the way that the rates are, there's no way to lock anything in right now. So they haven't locked anything, and they keep getting updates from their lender being like, "Hey, the interest rates just went up another 25 basis points," and they're like, "Oh my gosh, like will it ever stop?" So I think in general, rates right now are actually 7%, 7.25%.
Highest they've been in the last 22 years.
Yeah. And when I bought my house, I had to do a non-conforming loan. So I wasn't even able to do any kind of conventional because I was already full-time, and it's difficult to prove that you make money when you're making a bunch of money. I know it's
welcome to real estate investing.
I had to put 20% down, and the non-conforming loan didn't give me the best interest rate. So I'm at like 7.6%. I'm like, man, what I wouldn't give to have rates lower
back in the 2% range.
But honestly, I think I'm with you. There's not going to be a lot of people that are going to do much in terms of moving unless they just absolutely have to. But if people have an option, I don't see a lot of people wanting to take the option to pay a higher rate than they're paying now. Since rates were so low back beforehand, people are like, man, I'm paying like 3% right now. Why would I go up?
And a lot of America makes the decisions based on monthly payments. Most of America either buys their cars on financing or leases their vehicle, which is all a monthly payment conversation. And I remember back in the day when I bought my first car, it was on like a 3 or 4 year finance program. Now you can buy a car on a 7 or 8 year finance program. That's changed because people want to keep making decisions on monthly payments. And because of that, interest rates going up, it really affects our affordability on housing. That same $300,000, $400,000, $500,000 house is going to cost you more than double in monthly payment. And if you're not earning double, you may have to stay put where you can afford the monthly payment. So I think that does create a domino effect for the economy. Again, you and I are on the rental side, and not every American owns their home. I think it's around half, whatever. If there's not home sales, it does domino affect other decisions that people make. That's how people buy new furniture for their new house. And that's how you end up hiring contractors or whatever, because that home sale you had created a cash injection into your pocket. And maybe some of that home sale price went into your new house, but a lot of it's also going to go into reinvestment in yourself, reinvestment in your new home, and slings back into the economy. So if we're stagnant on the home sales market, I believe that is a domino that's not going to fall for a while. That's going to affect a lot of downstream stuff in the economy that relies on home sales to fund them.
I think part of that's true. I also think it's very micro specific. Like it's going to depend on the actual micro market that you're in. Yep. Like us, we just moved to Tampa, and we moved into this new development, master plan community that's just like ridiculous growth phase right now. I've got construction workers that freaking get to the neighborhood at 5:30 in the morning and start just yakking and hammering away, making houses. And we talked to the board before we bought this house in this community. They still have another 2,000 homes they're scheduled to build over the next couple of years in the community. And prices continue to rise, rates continue to go up. And it's like, is there ever going to be this inflection point? And I don't know, because it's Florida. So everyone wants to move to Florida. Florida seems to be this area where there's just never ending consistent growth.
It's where all the cool kids are going these days.
So So I'm wondering if it's a specific type of person that can afford this type of area. These homes are like 700,000 is like base price.
Right. That's not even with granite countertops.
That doesn't include a fridge, right? It doesn't include. I think the specific type of person in that level of the economy, like maybe in that income bracket, isn't really going to be nearly as affected with interest
No.
rates to where they are. And they're not too worried about monthly payments as much as they are just what they want to buy is what they want to buy. But what you're saying, the majority of America, as far as monthly payments go, I see that definitely being drastically affected.
And that's also being able to sell existing residents to move into a existing house, right? Not new construction. What's interesting is new construction is still experiencing growth. We talked about an article on that a couple of weeks ago on the show. Part of that has to do with the builders that are smart about it. If you need them to, are going to buy down your rate. You don't have to pay 6-7%, Mr. and Mrs. Homebuyer. I'll just throw 10, 15, 20 grand at your mortgage company to buy your effective interest rate down 4.5%, 5%, right? And that's just going to get buried into the purchase price. And as a builder, you're able to do that. A lot of these major builders, like the big dogs, they own the lending company. They own the real estate company, title company. They're vertically integrated. They got the whole thing, right? So their new construction is actually on a tear right now in this country because in some ways that's like they're the only option. That if you need to move, the only place you can go to get a nicely done house at a reasonable rate might be from a new builder. And so new construction, the article we talked about was some of the publicly held companies had record profitability on the new construction side. It's hard to put 2 and 2 together, but I think it's because that's where most home buyers are left with the options to go with regards to, well, you want to buy a house? You got to buy new construction. If you want to get in right now, move, get a quality home at a good interest rate, that's where you got.
Probably so, because that's definitely something that happened even with the transaction that the house we literally just bought 2 months ago. They give you all kind of incentives and credits. And I'm like, I wonder if the actual value of the asset is what they say that it is. Or if they're just artificially inflating it and then saying they're
probably own the appraiser
giving you discounts, but it's not really a discount. It's just the value.
But yeah, you deal with these things because you get into it with a monthly payment that you want to tolerate. People hate moving, so you're not going to move anytime soon, especially if you just move to new construction. You get a well-built house, but probably a reputable builder, and off you go. I mean, so you get what you want, and they get what they want, right? Guys, this has been phenomenal. Josh, I got to wrap up with you here. If people want to hear more about how they can either invest with you, learn from you, I know you got a student program as well too. So for any of those reasons, if people want to reach out, how do people get a hold of you to take the next steps?
I think the website's the best way. So if you go to ferraricapital.com, all of our social media platforms that we're on, primarily LinkedIn and Facebook, is there. You can also just immediately schedule a call with us directly on the website. Our podcast is on there. We've got blogs. We've got a free ebook. We've got newsletters. You've got more information about the mastermind. We've got so many things on there just as a centralized location.
FerrariCapital.com. Check out Ferrari Capital. Hear more about what they got to say. Josh, it's been great having you here, man. Have to have you on again soon.
It's a good time. Appreciate you having me.
Cool. Absolutely, man. Take care. Show. We want to give our thoughts on what's going on in the world, and the world keeps changing. Things keep moving. The hockey puck keeps moving forward, and we try and predict where we think that's going to go so we can give you guys good real estate investing advice. Our tip today is housing is a good lead indicator for a lot of things that are going to happen in the economy. May even cause more people to rent for a little while, which could help out us at DeRosa, and also a lot of you guys are all in the rental housing business, and that may keep our market strong for the foreseeable future. I appreciate you guys watching the Cash Flow Digest. One more time, if you guys are watching this program on YouTube or listening to it on Spotify, take a minute right now and go to Facebook and join the DeRosa Insiders community. And if you guys want to hear more about what DeRosa has to offer, go to our website, DeRosaGroup.com. We offer all kinds of cool stuff like passive investing, masterminds, creative education, premier education products as well that you guys can check out. So if you guys want to hear more about DeRosa or connect with us or even pick up a copy of my book, Raising Private Capital, new edition just released. That's what I got for you today, guys. Have a phenomenal weekend. Hey guys, Matt Faircloth here. Thank you for listening again to the Cash Flow Digest. I really appreciate you guys doing that. If you guys want to hear more about what DeRosa Group has to offer, go to DeRosa Group, DeRosa Group.com, DeRosaGroup.com online. You can hear about all the great things that we offer from an educational standpoint and passive investment standpoint on our website. See you there. And if you guys want to join our online community, DeRosa Insiders on Facebook, where you can watch this program get recorded every Friday at noon Eastern, and you can come on as even a guest or ask questions on the show. We hope to see you guys on our online community, DeRosa Insiders. See you there.